Hello and welcome to Ticker Property. I'm Kris Bonding. On today's program, we'll discuss what's happening in the world of finance and review the weekend's property results thanks to Real-Time Agent, which will scroll across the screen for the duration of the show. My first guest is from Port Group. Her name is Voula Kortsiras. Voula, welcome to the program.
Thanks, Kris.
Voula, a lot's happened in the finance industry, particularly with the Royal Commission. Can you give us an overview of what that's done to impact mortgage brokers in the industry thus far?
Absolutely. So obviously the Royal Commission has been going for a little while now, and the idea around the Royal Commission was to investigate what was happening within the banking world and the broking world, and I think it's affected the consumer market a lot more than what everybody thinks it has, because obviously it's
I was going to say, was it more from a consumer confusion about what's going to happen next?
I think the issue was originally was opened up to see what the systemic problems were, but it's actually extended far greater than that, because now it's affecting consumers a lot more than what we thought it would in relation to being able to get a loan as such now.
Was the biggest objective from the Royal Commission about finding the consumer the best mortgage interest rate, or was it more about taking away income from a mortgage broker? What is it? What do you think of its
I'm going to try and remain so I think the main reason they brought the Royal Commission out was for the consumer to have the best deal, but I think what it's actually done and what it's actually uncovered is there was a lot of systemic problems within the banking world, and obviously that flowed into the broking world as well. So what it's done is caused obviously ripple effect and some issues, and made the broking world a little bit uneasy, obviously, because of where the future leaves the broking industry. So that's what's obviously happened, and hopefully over the next few years what comes of it is a little bit more guidance, but also some relief for the broking industry, because up until this point it's caused some massive chaos and confusion and uneasiness for the broking industry. So we're relying on the government to make some firm decisions, but also to ease the pressure from the industry as well.
Have you seen lenders change the way they behave now since any of those announcements?
Yeah, obviously lenders have changed for a while now, and they've made things a lot more difficult. They've obviously, the HEM has been increased, which is, the way they calculate the living expenses for consumer clients. The parameters for a broker and what the expectation is when they're lodging a loan and what needs to go into that submission. So they've made it a lot harder for the broker. I'm not going to say that consumers aren't getting loans, because that's not the case. It's just that there's a lot more that needs to happen from the broker's perspective or from the bank perspective in order for the consumer to be able to get a loan.
So is that twofold? Is that providing more supporting documentation about income?
Yeah, there's a lot more that's coming out of it. So now, before we were sort of saying to clients, give us a breakdown or a rundown of your living expenses. Now we're saying, okay, give us a breakdown, but also give us 3 to 6 months worth of banking statements, so we can actually cross-check everything, to look at undisclosed debts, which is what the banks are looking for at the moment, and also to then marry up, what in their interpretation is HEM versus what the client's declaring as living expenses. And
previously to that it was around 3 months, is that correct, when it comes to looking at?
Correct. It still is 3 months, and some lenders will ask for it, some won't. But as from our perspective as brokers, we're asking for it to make sure that we can just cross-check, and also, so that we're comfortable when we're doing a loan that the client's declared living expenses and what they're actually spending is correct and in line.
So we'll keep on the same path of lenders. When someone's going for a home loan these days, there's obviously the tier 4, the big 4 banks out there. There's many online lenders these days coming out. There's the digital banks coming through.
Yep.
What should the consumer be looking at today?
I think they should just look for the best deal, and regardless of whether that's a major bank or a second tier bank or a non-conforming lender, whatever it is, that the facility or the product is right for them. And that's basically what a consumer should be looking for. So if I'm a consumer, I'm going to a mortgage broker, I'm going to my bank, I'm looking for, what is it that I'm going to get out of the loan? It's, what's my objectives? And really, the best rate and the best package ongoing for me as a consumer.
And how are fixed rates and the variable rates?
They're great
these days?
at the moment. So fixed rates at the moment, if you're an owner occupied, so you're living in the property, your rates are at, high twos, starting from, 2.96 if you're an owner occupied. Fixed, you can get fixed as low as 2.78. So it's some great rates. For investment clients, they're a little bit high, but still, you're starting from 3.29 for an investment loan. So the rates out there are really sharp at the moment. And so my suggestion to clients would be if you've got a loan and your rates, anything above, mid to high threes. If it start, yeah, absolutely. And if it's starting with a 4, speak to your broker, speak to your bank, because you're paying too much. Yep. Absolutely.
And what about package fees these days to get discounts?
So there's most loans have got package fees, and that's obviously so we can actually get the discount for the client. So they pay, let's say a $395 or a $365 package fee.
And what does that get them?
That's so that they can get a continued discount through the life of the loan, and it's also for them to potentially have benefits in relation to points or other things that the lender may have on special at the time. So you don't need to pay a package fee. You could go on a basic product. But the package fee is sort of like not an incentive, but it's just it's a way for them to offset the reduced interest rate.
But as a broker, you would normally go through that with the consumer and
Absolutely.
say if you pay the $395 fee in this example,
correct.
that you would pay less long term.
Yeah, and usually what we do and what a good broker would do would explain the differences between a package and a basic, and then sort of say to them, look, we're going to do some pricing, and the pricing will come back at this, and then we can look at the best options for you.
Yep. And how receptive are the banks to requests for discounts?
Oh, they're discounting. They're absolutely discounting now. There's a lot of competition going on at the moment, and you've got some banks that are offering frequent flyer points and velocity points, and there's a lot of banks now giving cashback offers. So they're definitely pricing. Yeah,
and doesn't matter if I've got a loan of $200,000 or I've got a loan of $1.5 million.
It does. So the higher your loan amount, the more of a discount in some cases you'll get. So it's obviously there's a starting from rate, depending on the loan amount. So it's obviously starting. Sometimes it's from 200, and obviously when you borrow above 750, the rate's potentially going to be lower. Yes. And also the velocity points or the cashback offer that they've got is going to be greater as well. Yes. So
it all adds up, eh?
Absolutely. Yeah.
So you talked about the lenders before. What are the interest rates from a first home buyer perspective? Are they paying more because they've got no service in terms of historical data for the banks to review?
Are you talking about the first home buyers?
Correct.
So it depends. So obviously when you're a first home buyer, your deposit isn't as great as if you're an existing customer with an existing loan. So the LVR, or the loan to value ratio, is going to be greater. So when that happens, a lot of the time the rate is slightly different because it's obviously going to incorporate the mortgage insurance fee. So yeah, that obviously affects the overall rate to the borrower.
And as a first home buyer, how do I reduce that mortgage insurance fee so I don't have to pay it?
You can either, obviously tip in more, with your parents or, somebody that gives you a deposit, or a lot of the time you find that, the first home buyers or, people starting to get into the market, they've got parents that may want to give them part of, their equity in order for them to be able to get into the market.
So in that instance there's no cash transfer as such from the parents to the child?
It's basically an amount within the value of the parent's property that is used to obviously offset the loan to value ratio for the purchase of the consumer or the first home buyer.
Yeah. And then as I'm going through a loan application, as a broker in your shoes, what are the banks looking for from an expense perspective? So you've mentioned before 3 months, 6 months worth of data. What are the banks looking for? What shouldn't I spend my money on today for the banks to like me?
Well, I don't think it's a matter of them liking you. They're looking for undisclosed debts. So they're looking for, are you being transparent? Are you telling us everything that you're doing at the moment, day to day? Is there, an afterpay facility? Are you gambling? Are you spending too much at the shops? Are you, getting takeaway all the time? There's a number of things they're looking for. So it's not just you've declared $3,500 worth of expenses. We want to see if you've spent that much. It's also looking at, is there any things that you're not telling us? Have you forgotten to tell us about a credit card or something.
So if I've got Afterpay or I've got a lot of gambling transactions on a statement, do the banks just completely say, or some banks completely say, no, that's not the type of client I'm after?
They won't say no, but they will look at it seriously, and they will reconsider whether they do your application. And obviously, the lower the loan to value ratio, when they're looking at doing a loan, in that instance, is going to be far better. So if you're looking at a client that needs an 85% loan, which is where we're going into mortgage insurance territory now, and we're looking at undisclosed debts, well, they're likely going to decline the loan because you haven't disclosed the debt. So what else are you hiding? So when we're looking at the 3 months bank statements, we're looking for transparency, we're looking for undisclosed debts, but we're also looking to see how much day to day is this client spending. So if you are looking at purchasing, and for example, at the moment you're spending $4,500, you're being a little bit frivolent, you're on your own, you don't have any expenses, our suggestion would be, rein that back a little bit and look at, curbing your spending, because that will affect your borrowing and how much you can borrow moving forward. Absolutely.
And what's the process take? Some banks may take longer than others to assess applications, and it's back and forth. There's valuations that go through.
Absolutely. So there is what's considered, your SLA or your turnaround times with all the banks. A lot of brokers will order upfront valuations, which help because that, it basically progresses the process. So you order an an evaluation up front. While that's waiting to come back, you've already started the process. So then by the time the valuation comes back, in most instances, you've sort of already prepared the application. So it's working in conjunction with each other. So you're not waiting 2 or 3 weeks before you're actually getting an approval as such.
And how long's the typical valuation stage?
That's only usually a few days. Okay. So at the moment, you've got some lenders that are taking 4 to 5 days to pick up a file. You've got some banks that are at 2 days. You've got some that are at a week now because they've got all these specials, cashback offers and frequent clients. That's throwing out the turnaround time a little bit. But they're getting done. It's just that depending on what kind of criteria they're looking for, the loan amount, the loan to value ratio, and also what kind of submission, for example, the broker's putting together. So if you're lodging an application, you've got everything there, it's highly likely that the turnaround time for that application and the approval is going to be greater and quicker than if you're just sending in bits of information.
Is all that data around SLAs available to a mortgage broker, so you can help the customer make an informed decision? Absolutely. So usually we, as a broker, you get updates, whether it's daily or every few days from the lender saying we are at this turnaround time or we're at this turnaround time, so you can make that decision. A lot of the times, though, in most instances, it won't change the client's mind. And what we say, if you're not in a huge rush, you shouldn't make the decision to go with a particular lender just because they're at 1 week decisioning. Because sometimes they'll say to you it's going to take us 7 days, but it'll only take them 3. So that's just a guide so that people are aware of how long it can take. And some banks wanting a first home buyer versus an established versus an investor type client. Does some banks choose what they want their book to look like?
I think every bank would have their preference. They can't announce that. They can't say, hey, we would much prefer an investor or we would much prefer an owner occupied at 60% loan to value ratio. That would be the ideal client for everybody. Yes. But I dare say the policies within each lender would guide what kind of business they would get. Absolutely. Yep.
So when you look at someone who comes in and hasn't got the right amount of deposit to go and get a home loan, what's the recommendation for someone who's going into the market or the property market for the first time? They may have a 3% deposit as opposed to a 5% deposit.
Yep.
What's your recommendation on what someone should do in that instance?
So, we've quite often had clients that have come to us and had not enough deposit in order for them to purchase. And we've sort of said to them, look, if you keep saving the way you're saving over the next 3 to 6 month period, we can then revisit it and then look at putting a pre-approval in at that point in time. Some clients come back and say, hey, we've had some parents that have gifted us some funds, and so obviously we're going to be quicker at coming back to you. And some people take sometimes even up to 12 to 18 months to get their savings together. So that happens as well.
Voula, thanks for the insights.
That's
and what's going on in the finance space.
My pleasure.
Let's take a break. When we return, we'll be joined by the Head of Property Management at Upstate Real Estate, Simona Safar. Welcome back to Ticket Property, powered by Movinghub. Our next guest has been in the property industry for over 13 years and is well known for providing the highest calibre of property management training. I'd like to introduce the Head of Property Management of Upstate Real Estate, Simona Safar. Simona, welcome.
Thanks, Kris.
Simona, what's happening in the rental market?
Look, it's an interesting time in the rental market at the moment. We've sort of come off a bit of a lull period. We had a few different mixes in the market, and now we seem to be coming into a much stronger rental market than what we were in previously. And we're noticing that stock levels are dropping and that rents are increasing again, which is great.
Yeah, we have seen the clearance rates increase this time last year thanks to real-time agent. So what does it mean for investors and buyers?
I think it means it's restoring investor confidence back in the market now. Sales and property management, they work hand in hand. There's no two ways about it. And I think with the loosening with the banking, that more people, investors particularly, are coming back to the market, which is increasing stock levels, which is making properties out there a little bit more competitive on the rental market.
Which is all about supply and demand. Obviously, the more stock that's out there, the lower the rental amount could be.
Yeah, absolutely. There's no two ways about it. And, we've definitely seen stock levels at their highest, probably in July, where they were sitting at their highest, particularly on the northern beaches, and rentals were sort of on the decrease at that point. But now coming into summertime, spring, we had a really strong spring and pushing to a really strong summer. We've noticed that stock levels have come down again, and there's definitely more demand in the market for rentals.
And what should investors do to stay competitive?
I think a lot of the time investors, maybe 10 years ago, new carpet and paint was cutting it. I think now carpet and paint is just a sheer maintenance factor for a property, particularly with all the new developments which are coming. The expectation of the renter has definitely increased. So my recommendation to investors would be not just do the new carpet and new paint, but put in a new kitchen, put in a new bathroom, invest in some additional storage. These are the sorts of things that people are willing to pay more for. And given that the market is becoming increasingly competitive with the new stock that's online, I suggest that they understand that they are now competing with brand new, 2-bedroom, 3-bedroom, even 4-bedroom apartment and homes, which have been fully renovated throughout, that they make their property more competitive.
So is it mainly around competitive, or does it also increase the rental amount? If someone goes and spends a $20,000 makeover on a number of things outside of the items that you mentioned, is it also giving them an additional amount of income, or is it purely just amount of just being competitive?
I mean, naturally, it will give them additional income because they've made capital improvements to the property. So yes, they will yield a higher rent, but by staying competitive, it also means that the return on the investment remains good. You don't want to be seeing rents go down, but when they do go down, naturally those properties that are older are going to suffer the most because they aren't as competitive in the market. And always good to consult an agent on what capital expenses to actually put into the property so that you get the best return on your investment and get the best yield possible.
And is that something you obviously walk a investor through in terms of what is competitive and obviously what to expect from an agency just like yours, Simona?
Look, we've got a very unique service here called Property Concierge, and Tess, who is our Property Concierge, actually takes care of that department, and we'll walk a landlord through step by step each process of the renovation process. We can arrange renovations for landlords on their behalf. It doesn't cost them anything to use this service with Upstate, and it also means that they're using trusted tradespeople and getting guided advice on how to best maximise their return on their investment property. So yes, not all agencies have that service, but we have invested heavily in ensuring that we have a property concierge here to assist our landlords to ensure they get maximum return on their investment.
And what number of days on average are you seeing the vacancy rate?
So currently at the moment, we've got average days on market of 8 days, which is very good for an agency on the Northern Beaches. That is very different to what we were seeing in July, where our days on market were closer to 14 days, so almost double. But roughly, if a property is priced correctly, has good professional photos, and is advertised correctly, we're noticing within the first 2 open homes that we are managing to lease that property at asking price or above asking price in this current market.
Simona, thanks for the update on the rental market. Appreciate you coming on the show.
My pleasure. Thank you so much, Kris.
Let's take a short break and we'll be back on Ticker after the break. Welcome back to Ticker Property. I'm Kris Bonding. InstaRent is the first fully integrated online solution for property owners to manage their own investment properties. Within the first 12 months of launching, InstaRent has been established and has $5.5 billion of property management under market. AJ Chand is the founder of InstaRent and joins us now. AJ, welcome.
Thank you for having me, Kris. Pleasure to be on the show.
AJ, tell us all about InstaRent.
Well, InstaRent started as a platform to help owners self-manage property. I was one of them. I was managing my property, self-managing my property for a while there, and we created a platform and an app now that services landlords and tenants that are self-managing property.
And how does the app work? Are you charging the investor to list their properties and self-manage, or are you charging the renter?
No, it's landlords. So we have two models. We have a freemium model which allows for the user to use most aspects of the property management platform. So to manage from listing their property to managing their accounts, inspections, repairs, pretty much virtualizing the property manager. And we also have a premium model which comes with a lot more support from our end. And if they opt for that, then it's only $9.88 a month. So it's quite a low point price point for landlords to self-manage. As you know, traditionally, cost of property management has been quite extensive.
So how do you compare? You've obviously got an app and you've built some software versus a traditional agency. What would be the dollar saving for a DIY landlord versus going directly to a real estate agent?
It's close to 80%, 80% that we've seen in savings, because when you look at how landlords are currently managing, that's on average, Australians are paying close to 10% in management fees, and that's all the other little fees that add on top of it too. So being in the property state that we are in now, and a lot of hardworking landlords out there are struggling to make ends meet, we just thought we will release one that drives with technology, really.
And I see on your website that you've been backed by the New South Wales government. Could you explain how that relationship's all about?
Yeah, so New South Wales government has been a big part of InstaRent's development. They were the ones who first validated our MVP. We received a couple of grants from the New South Wales government, and the reason behind them backing us was purely because how they could see how good help the broader property community and help investors in terms of reducing the management cost and also servicing debt for the property as well.
Fantastic, AJ. AJ, that's all we've got time for today on today's show. Appreciate you coming on InstaRent, from an InstaRent. And if there's anything else that you want to explain to our viewers, feel free to drop a line to the Ticker team on socials or via the website. Again, AJ, thanks for coming on the show.
Thank you, Kris. Pleasure.
Thanks for watching. We'll see you all next time.